So we're here with the CEO of Galaxy Digital, Mike Novogratz. Appreciate you taking the time to chat with us. Bitcoin
Excited.
2021. Very big times down here in Miami. The talk of the town has been all about sustainability, and obviously Elon Musk keeps talking about it. It's a big thing. How big of an issue is it, really, though, when you dig into it?
Well, listen, first of all, sustainability is a big issue for the whole planet, not just for the crypto industry or the Bitcoin mining industry. And when we look at it in context, I think our community needs to do something just like every other community does. Traditional banking, YouTube uses 2.5% of all electricity. That's a crazy statistic. YouTube, we're not going to ban YouTube. YouTube is awesome. I will literally bow down at the altar of YouTube, right? There's unbelievable utility from it. There's also unbelievable utility from the Bitcoin blockchain. It costs a lot to mine. It uses a lot of electricity because it was designed that way. If we want something to secure trillions of dollars of wealth, you don't want a guy with a pop gun, right? You want a robust system. And so I think it's inherent on the communities, the community needs to be responsible to move our industry, like all industries, towards a greener future. And I think you're going to see all kinds of initiatives come out soon.
All weekend, I've been hyping you up as the Warren Buffett of crypto, which is ironic because we all know his take on crypto. But you're involved in so many different areas. I don't know if it's a fair comparison.
Well, I am the oldest guy in crypto, and so maybe, Warren is maybe the oldest guy in traditionally, well, Charlie Munger. Listen, we decided at Galaxy that we wanted to be an ecosystem company. And the thesis was, let's take our own money. It started as my family office, and it's now a public company. Our own money, invest in the coolest projects, the cutting edge technologies, in coins, in custody solutions, you name it, we're trying to invest in it. And we want to take the understanding we learn and then transmit that to our clients. Our clients from the investment banking division, our asset management division, our sales and trading clients. And so what I found is everybody who enters this space goes on a similar journey. They start with Bitcoin and say, whoa, this is pretty cool. And they might have different opinions. Is it going to be digital gold or decentralized money? And then they're like, well, what's that Ethereum thing? And as they go down this path of understanding how this ecosystem lays out, we couldn't have NFTs without Satoshi. Like, a lot of the artists don't think they're Bitcoiners. They are. Everyone's a Bitcoiner in this whole ecosystem because Satoshi's white paper gave us this brilliant, kind of one-sentence takeaway. Yeah. It was the first digital signature you couldn't counterfeit.
Yeah, it was a spark that kind of lit the whole fire there, and it's an on-ramp for a lot of different technologies.
Yeah.
But you similarly, I guess, have built Galaxy as the on-ramp for a lot of institutions, and you're also kind of in the way that this billion-dollar deal, more than $1 billion deal with BitGo really increases your guys' connections with some of those more established investors. I mean, talk to me about how that changes the landscape, because some people might say that we got to 60,000 in Bitcoin or above it because of institutional money coming in. How important is it?
Institutional money is wildly important. So let me give you some numbers. Total crypto market cap, that's Bitcoin and everything else, is about $1.5 trillion. That's 30 basis points of total global wealth. 30 basis points, nothing. Listen, for that to shift to 2%, 3%, which I'm fundamentally in belief that it will, you need institutions. They own all the money. And so Bitcoin is still a 95+% retail dominated ecosystem. Maybe a little less, maybe 90%. But as institutions are slowly moving in, they take time. They don't wake up one night and say, buy me 3 yards of Bitcoin. I mean, unless they're Elon, right? They put a little in. They do the same thing everyone else has done in this thing. They put something on the board, so they start understanding it more. Then they get more confidence. And what you'll see is you'll see higher prices, but get more people entering the market.
Yeah, it sounds like we're kind of stuck now in this $35,000 range when it comes to that, and some people might point to the ESG concerns that institutional investors have as maybe a problem to get back to where we were before. I mean, do you see that playing out, or how big of an issue is it?
What happens in markets is you get a new group of investors that come in, they get excited, and then they push the market higher. So if you think about when Paul Tudor Jones bought Bitcoin, and he famously published that paper, I think Bitcoin is about $8,000 or $9,000. A lot of hedge funds got into that zone. Well, a year later, it's at $60,000. The urge to ring the cash register is such a deep-seated human urge that's what happens. People made a lot of money in something, they sell some. They sell some to buy a house, to buy their girlfriend a ring, to diversify their portfolio so they're not 90% Bitcoin, right? And so we see these kind of step function moves, and then we'll see a long period of consolidation. And what happens there? You're turning over, old guys selling, new guys buying, and you're waiting for the new narrative to arrive. That brings the next wave of money in. And I think we're in one of those periods right now.
When we look beyond Bitcoin too, obviously there's a lot of enthusiasm in DeFi and some other chains. I know you guys have invested in a lot of very cool projects. Terra is one that we've discussed too before. Yeah. I mean, how important is that? Maybe, I don't want to say it's stealing the attention away from Bitcoin, but maybe the enthusiasm there for what the future looks like in attracting capital.
Listen, and one of the way markets work is when energy pushes them up, supply responses happen. What happened in 2017 is everyone thought everything was Bitcoin. Litecoin was the poor man's Bitcoin, right? Ethereum was the better Bitcoin. Floyd Mayweather coin was the boxing Bitcoin. And so you had this giant supply response which collapsed prices. This time around, we've learned some, but not enough, right? You can differentiate the type coins, right? There's store of value coins. I'd put Bitcoin in that thing, but I'd also put Litecoin and Dogecoin. And I think those things pull away from Bitcoin.
Yeah, and I mean, and Dogecoin, I guess, is a good example to speak to that too, because you can debate what the value of Dogecoin might be, but you can't argue against the satire of it all to really point at the industry and say...
They've created a community. They have a brand. That community's proving to be more resilient than I would have thought, who keep buying in. You know, there are 8 billion people on Earth. There are, I don't know, 6 or something that got a cell phone. Like, the world is connected. You don't need that many people to have a monster community as a percent of the people out there. And so what we're seeing is lots of different ways where wealth or value is now kept. Like baseball cards I talk about all the time, or basketball cards. The valuations of those have skyrocketed. And so there's a community of people that say, hey, this is where I'm going to store a lot of my value.
All of those things aside, too, I mean, let's be real, Bitcoin is the one that attracts all the attention when it comes to big money. And we've talked about the SEC waiting on a Bitcoin ETF application and what that might do. Galaxy Digital, obviously, one of those applications on the desk right now. How big is that, though, in maybe re-triggering some money coming into the space?
Yeah, it's big. Listen, I've always seen my job as trying to get people into the tent, right? And, you know, some young people that got into the tent really easily. They set up their own wallet. They bought a Trezor originally, you know. They got a Coinbase account. The big wealth in America is 50 to 80-year-olds. They typically work through RIAs, right, registered investment advisors. They're slower to buy in. That trend has started. The ETF just makes it easier. And so, yes, if we had an ETF tomorrow, the price would go higher. In the long run, things like our funds, the ETFs, might not even be necessary because we'll all get used to keeping things on our own digital wallet, right? But it's a transition period.
For you, I mean, when you look out at it, maybe the younger investors who might be more savvy, who are really into DeFi right now, who understand how these DeFi protocols work. I mean, you guys have invested on kind of both fronts, right? You can talk about BlockFi and being a centralized place where you can earn yield on your Bitcoin and other cryptocurrencies, or some more interesting DeFi applications like Terra that are building these things out. How do you look at the regulations around that, though? Because, you know, some follow KYC rules and DeFi
I think
protocols.
So we invest in a lot of these protocols yet, but we don't use them ourselves because of the KYC issue. And it's really simple. You got to know your customer. And so if I'm acting against a smart contract, how do I know who's on the other side of that smart contract? One argument you make is, doesn't matter. It's a smart contract. You know, the more conservative argument is I got to do the best I can to find out who's on the other side. There are lots of smart people. I mean, when I say lots, trying to solve this, right? Think about the blue check. I don't care who you are as long as you got a blue check. And I would bet within 12 months this gets solved. Then I think DeFi is going to really explode because think about it, there's no one else to regulate. It's just code. And so the regulators can regulate who uses it, but they can't regulate the code. And so I actually think one of the big surprises of the next 5 years is just how fast DeFi takes off.
I would be remiss if I didn't ask some of the risks that we've seen, and I know it's a Bitcoin conference, so not a lot of people are very excited to talk about risks, but there's one that stood out to me when we think about Tether and the way that that's always been, weirdly, something that people return to because there is a bit of a trust thing there. where they had said, it's 1-to-1 on the dollar, and they published what they have there and the assets. It's big in terms of maybe the financial risk of trusting that you have something like that, a stable coin that people trade with.
Tether is a non-bank bank. When you think about it, right? They take in deposits. They now invest in, they used to say we only invest them in dollars. Now they're like, well, we mostly invest them in dollars. We have some Bitcoin, we have some other credit yielding investments. So they're trying to get a portfolio return versus their zero interest rate deposits. They have convinced 80 billion people or $80 billion that they're trustworthy. And if they manage that portfolio well, they'll be fine. If they screw it up, they won't be fine. And I don't think that's systemic to our system anymore. It might have been in the past, but it's not. Well, hey, they've been through the scrutiny, so now people know what they're betting on. Right? There's no more lying, oh, it's back 1 for 1. This is our portfolio. They publish a version of it. It's not audited, but they've convinced huge amounts of people to trust them. And so listen, it would be bad, certainly for the Tether owners and for the Tether community, if one day there was a run on the bank and they were like, oops, sorry, we don't have as much money as we said we did.
But that seems like it would be a bigger issue, not just for Tether, but for the entire crypto space, if it's the fourth largest.
It's going to be an issue in terms of regulators wanting to have some understanding. As these systems get bigger and bigger,
yep,
they want to understand what the systemic risks are. I mean, if you think about even the big credit companies, Celsius, BlockFi, they take in deposits and they lend them out with a lot of leverage. So if I was the head of the SEC, first thing I'd say is that feels like a non-bank bank that needs some oversight. And so listen, I don't think all regulation is terrible.
No.
I think we need good regulation. Gary Gensler's a smart guy. I trust that he's going to come out with smart regulation. If he doesn't, I'll drive up to Boston and headbutt the guy.
Yeah.
But I've known him a long time. He is very smart, and he's not going to be swayed, I think, because the other side, right? Who's to lose in DeFi? The banks. They are going to lobby like crazy. Less against Bitcoin, but more against DeFi.
Yeah.
But Bitcoin is the Trojan horse to get everything in. And so, it's not going to... Revolutions don't happen without a little bloodshed, right? There's got to be a little bit of... someone's losing when someone's winning.
Yeah, it's been fascinating to watch, too. And you're kind of in between these two worlds here as the man who's bringing a lot of people on. But Mike Novogratz, love chatting with you, man. We got to continue this conversation in much
Thanks
more
so
detail.
much.
Have fun here in Miami.
I'm going to try.
All right.
I'm having too much fun.